Between Boeing's manufacturing issues, its ongoing machinist strike, and natural disasters like Hurricanes Helene and Milton, the airline sector is dealing with a slew of headwinds. So where can investors find value? With just a few minutes left to the closing bell on Wall Street, we are looking at how to play airline stocks with the Yahoo Finance playbook. Joining us now, we've got Steve Trent, Citi's managing director. And Steve, it's great to have you in studio with us. I do want to start on those natural disasters, specifically Hurricane Milton, heading towards Florida as we speak. To what extent do you think that could really have a significant impact on some of these airline stocks?
Yeah, and good afternoon, and thank you for having me. Absolutely, on a short-term basis, we could see some impact here. And when we think about the impact of a storm, roughly speaking, rule of thumb, every 1% decline in available seat mile growth translates into a 2% decline in pre-tax earnings, all else equal. So we saw 2 years ago Delta lose 3 pennies per share on the storm that hit Fort Myers. Let's see what happens this time.
Are there certain airlines in your coverage university that are more exposed to Florida than others?
Yes, absolutely.
Yep.
So the discount airlines, generally speaking, a lot more exposed. The U.S. Big Three have, of course, significant international capillarity. But Florida was the only place open for a number of years after the pandemic hit. So several of the airlines have significant metal in that market. Among other factors, Southwest comes to mind, for example, when we think about its exposure to Tampa, but they're not the only one.
You mentioned budget airlines, which made me think about Spirit. And I was just taking a look. It's down 97%, and this is coming on the heels of reports of a potential bankruptcy. How are you contending with a name like Spirit?
Yeah, great question. So I have to be a little bit careful about single stock mentions, but what I will say about the discount airlines, generally speaking, they've had a tough time relative to the network carrier. So we've seen a significant gain in earnings wallet share for the network guys post-pandemic, especially Delta and United. And if you're a discount airline, the market's somewhat moved away in terms of demand. You don't quite have the revenue verticals you need, co-branded card, loyalty, significant premium cabin to really offset the seat mile cost challenges. So you're seeing these groups move into premium, and at the same time, they're trying to cut some routes, but it's a tough road. It's a tough road.
Well, JetBlue is sort of trying to do that as well, right? They've got the new lounges, they've got a elusive card that is potentially coming. I know you can't talk specifically about JetBlue, but how do you view that kind of strategy in this environment? Yeah,
absolutely. So I think JetBlue is one of the ones I can speak more freely about. And I think that one, maybe relative to the other discount airlines, they have a little bit more of a track record with the Mint product, for example, and some premium type revenue that they're able to generate. But even then, it's difficult. You have Airbus narrow-body fleet. You've got powder metal alloy contamination issue with the Pratt & Whitney geared turbofan engine. So that's resulting in more aircraft on ground. So at the same time, you've got that seat mile cost pressure. You do not have the same unit revenue strength you do with the network majors, especially the first two I mentioned.
Steve, another issue I want to get your take on, these headlines that talks have broken down between Boeing and the union. I know you don't cover Boeing, so not looking to pin you down on that name specifically, but just your broader take, Steve, on the ripple effects of this across your coverage universe.
Yeah, absolutely. I mean, I think on a longer term basis, there's just, over the next couple of years, very likely to be a paucity of new equipment per capita. So everybody's fleet is going to age. And as a consequence of that, maintenance demand is probably going to intensify. So we'll see possibly some seat mile cost pressure coming from higher maintenance expense, more frequent maintenance expense as the fleets age. And what that means for the folks out there that are shuttling people in passenger planes, this is probably, on a long-term basis, relatively good news for a network airline that can more directly put that scarcity into pricing. And then we think of names on the aircraft lessor side, for instance, that maybe see some market share gains, and AirCap comes to mind. A Fortress Aviation with its very powerful engine module capability. These are the type of names that screen as...
So kind of a mixed bag, actually.
Absolutely.
Yeah.
Absolutely.
We're also heading into Delta's earnings print. What should investors be watching?
Absolutely. So I think 3Q is pretty much settled as we look into the fourth quarter. Do they reiterate their commentary on looking at sort of the upper end of the full year guide? I know they said that recently, but since they said that, we've had oil move up a bit. So I think some reiteration of that guidance is going to be positive for the market. 2025, maybe it's too early to say anything about that, but we're constructive on the name, and we look forward to what management has to say at their November conference.
All right, Steve, always great to see you. Thank you for coming in.
Pleasure's mine.